Hello and welcome to this video on investing during a recession. In this video, we will be discussing the investment philosophy of one of the most successful investors of our time, Charlie Munger. Charlie Munger is an American businessman and investor, who is best known as the vice chairman of Berkshire Hathaway, a multinational conglomerate holding company. He's also known for being the right-hand man of Warren Buffett, one of the most successful investors of all time. Munger has a wealth of knowledge and experience when it comes to investing, and his insights on investing during a recession can be especially valuable. So, if you're interested in learning more about how to invest during a recession, then keep watching. Before we dive into Charlie Munger's tips for investing during a recession, let's first define what a recession is. A recession is a significant decline in economic activity that lasts for more than a few months. It's typically characterized by a decrease in gross domestic product, GDP, a rise in unemployment rates, and a drop in consumer spending. Recessions can be caused by a variety of factors, such as a stock market crash, a global pandemic, or a natural disaster. While recessions can be tough on the economy and many businesses, they can also create opportunities for investors. During a recession, stock prices may drop significantly, providing investors with the opportunity to buy quality companies at a discount. Additionally, companies may become more efficient and innovative in order to survive the recession, which can lead to long-term growth and profitability. Therefore, investing during a recession can be a smart strategy for investors with a long-term mindset. Charlie Munger has a set of principles that he believes are key to successful investing during a recession. Firstly, he advises investors to focus on quality companies that have a durable competitive advantage. These companies are likely to weather the storm of the recession better than their competitors, and will be in a better position to recover once the economy picks up again. Secondly, Munger advocates for having a long-term mindset when it comes to investing. Instead of focusing on short-term gains, he suggests that investors should focus on the long-term prospects of a company. This means investing in companies that have a strong track record of growth and profitability, and that are likely to continue growing in the future. Finally, Munger advises investors to be patient. Investing during a recession can be nerve-wracking, as stock prices can be volatile and unpredictable. However, Munger believes that patience is key to successful investing. By staying invested for the long term and not getting caught up in short-term market movements, investors can position themselves for long-term success. Let's take a look at some case studies of companies that Charlie Munger invested in during past recessions, and see how his investment principles played out in these situations. One example is Wells Fargo, a banking and financial services company. During the 2008 financial crisis, Wells Fargo was hit hard by the recession, with its stock price dropping significantly. However, Munger saw the potential in the company's long-term prospects and invested heavily in the company. His patience paid off, as Wells Fargo eventually recovered and is now one of the largest banks in the world. Another example is Coca-Cola, a global beverage company. During the recession of the early 1980s, Coca-Cola's stock price also took a hit. However, Munger recognized the strength of the company's brand and its ability to adapt to changing market conditions. He invested in the company and held onto the stock for decades, reaping the rewards of the company's long-term growth and profitability. These case studies demonstrate how Munger's principles of investing in quality companies, having a long-term mindset, and being patient can pay off in the long run. While investing during a recession can be a smart strategy, there are also some common mistakes that investors should avoid. One mistake is panic selling. When stock prices start to drop, it can be tempting to sell your investments in order to avoid further losses. However, this can be a costly mistake, as it often means selling low and missing out on potential gains when the market recovers. Another mistake to avoid is chasing short-term gains. During a recession, there may be opportunities to make quick profits through speculative investments. However, these investments are often risky and can result in significant losses if they don't pay off. Finally, it's important to avoid investing in companies that are not well positioned to weather the storm of a recession. While it can be tempting to invest in companies with low stock prices, it's important to remember that these companies may not be able to survive the recession and could end up going bankrupt. By avoiding these common mistakes, investors can position themselves for long-term success during a recession. In conclusion, investing during a recession can be a smart strategy for investors with a long-term mindset. By following the investment principles of Charlie Munger, such as investing in quality companies, having a long-term mindset, and being patient, investors can position themselves for long-term success. It's important to remember that recessions are a natural part of the economic cycle and that they can create opportunities for investors. However, it's also important to avoid common mistakes such as panic selling, chasing short-term gains, and investing in companies that are not well positioned to weather the storm of a recession. We hope you found this video on Charlie Munger's tips for investing during a recession helpful. If you have any questions or comments, please feel free to leave them in the comments section below. And don't forget to subscribe to our channel for more videos on investing and personal finance.